You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's popping off in the realm of futures options? Well, let's find out together, shall we? It is time for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from the TAG, optionsinsider.com, as well as from the network, upon which all of you are just devouring all of my shows. Thank you for that. You know, there's more bandwidth where that came from. So keep it up. If you like what you hear, this show, anything else, all we ask you, throw a like, a star, a comment, whatever your platform lets you do. All of that in aggregate helps new people continue to discover the content. And again, they are doing so en masse. No small part thanks to all you folks out there for your kind word of mouth and enjoying the shows we've been putting out there for now over 17 years. Crazy cakes. Of course, if you want to go above and beyond, you want to check out some exclusive content, you want to win great, fun, fabulous prizes, maybe we'll give one of those away here today. Might be kind of fun. Then head on over to theoptionsinsider.com/pro. That's the place to go to check out all the great stuff. Just had a great pro Q&A earlier this week with Mr. Scott Nations, who does a lot of futures talk, also talks a lot of vol. So that was a pretty fascinating one. And then, of course, Options Oddities comes up at the end of every week. All sorts of other fun stuff going on throughout the week. Live streams, so you can heckle all of our hosts. All sorts of fun to be had, including great giveaways. In fact, maybe we'll do one of those right now. First, let me introduce my cohort holding down the CME Group hot seat this week. Our old buddy, Mr. Russell Rhoads, the author of a legion of vol-oriented tomes. Also, corrupter of young minds over there at the Kelley School of Business. Mr. Rhoads, welcome back to the show, sir.
I'm taking a break from corrupting in my office now down here in Indiana.
There's no corruption going on right now?
Looking forward to talking about options on futures big time. I've got a student that I know she's listening right now that it just absolutely has fallen in love with options on futures. She's been trading futures for a couple of years, and now the risk control that she can get from options while she's in the classroom, she's digging it.
Wow, I love that you're leading your students to the dark side of futures options. That's awesome. Just to going a step beyond, the apples that everybody wants in NVIDIA. It's going straight to nat gas. I love it. I love all of that out there. Speaking of things that I love all of our pro members as well. Mr. Rhoads, I don't think we've ever had you do a giveaway with us before, have we?
I don't think so. I mean, we've talked about it. I've been cleaning out a bunch of industry swag to send down to you guys.
Well, I won't. I don't need you to do the giveaway. If you want to send us stuff for the pro, we will always put it out. But we have quite the deep bench.
I talked to your producer about that. And,
did you?
And I've got I've got like 15 Russell Index hats because everybody thinks it's funny to give those to me.
Because your name is Russell. Yes, I get it.
Yeah.
The humor goes deep here. All right, sir, I have fired up the random number generator. Our pro members have been waiting patiently for over a week to determine the winner of the January Pro Trading Crate. I know you're popular with them. They like you. So I thought, who better to pick the winner? Maybe not. If you don't pick them, they may not like you anymore. So be careful.
That's what I'm thinking.
All right. So the number generator is flying. When you tell me to stop, I will hit stop, sir, and we will determine who the winner is. Well, I should say you determine. Send all hate mail to Russell. All right. Here we go, sir.
Okay, no whammies. No whammies. No whammies.
No whammies.
Stop.
Bam. All right. There we go. All right. Who did Russell pick? Got to scroll down a lot now, which is nice. Nice to see all the new names in the list. That's always good. Yeah. Welcome to all of our new members from this year. Oh, Wolfpack. That's one of our newer. He hasn't joined this year. I think he joined towards the end of last year. But welcome to Wolfpack. Congratulations. Mr. Russell Rhoads has picked you. Everyone who's angry you didn't win or win again, send your hate mail to Russell Rhoads. Mr. Wolfpack, our producers will be in touch with all sorts of questions for you. And then pretty soon, lo and behold, to your door will come a magical, a mythical, custom, bespoke pro trading crate designed and built just for you. Should be awesome. Again, no small effort and expense goes into putting these things together and sending them to you folks. But you know what? We love all you pro folks. It's the least we could do for you. So if you want to participate in all this fun, you want to maybe put your name in the hat to win the February Pro Trading Crate, head on over to theoptionsinsider.com/pro is the place to go to learn more as we keep on rolling right on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we do just that. We break down everything, lighting it up to the light side and to the dark side. Mr. Rhoads, since the last time we've chatted, we've added a new wrinkle to the Movers and Shakers. We also talk about moving and shaking from a vol perspective. But we'll start in the old underlying beat, which right now, listeners, if you look at the full universe of things trading at CME, we are leaning, I would say, 60-40 red over green this week. So just slightly dipping towards the red this week. But Mr. Rhoads, where should we begin our journey, to the light side or to the dark side, sir?
Oh, let's do light side.
All right.
I'm interested in a couple of those markets.
All right, to the light side we go, listeners. And number 5, to the light side, we kick things off in energy, in particular, Brent. Brent up 2.88%. Don't talk Brent that often for a variety of reasons here on the show, usually because it really can't hold a candle to WTI from a volume perspective. So we usually head to WTI. Plus, that's usually what most of you are trading out there. So, but still, kicking things off in the energy with Brent. Number 4, off to the ags. It is soybean oil off 4.82%. Number 3, man, we're moving all over the place already. From energy to ags, now to crypto. In particular, it is Bitcoin up 5.14%. It was number 2 in the same direction last week, up 8.11%. So has the worm turned again after the worm turned post Bitcoin ETF approval? And we saw a sell-off of over 7,000 handles back below 40K in Bitcoin. Has the worm turned again? Are we rallying back up? Good week out there, at least. Number 2, back to energy. It is RBOB up 5.33%. Number 3 in the other direction last week, off 3.81%. And number 1, keeping it in the energy. It is heating oil up 5.65% out there. So a lot of energy in the light side this week with a foray into ags and to crypto just for fun. Now to the dark side we go. Start off in the metals, listeners. Copper off 3.98% this week. Number 4, back to the ags, this time to the livestock. It is lean hogs off 4.3%. Number 3, from the livestock to the rates, Ultra 30-year off 4.37%. It was number 4 to the other direction last week, up 4.5%. Number 2, back to energy, our old friend Nat Gas off 6.15%. So we have 2 of our 3 frequent offenders on the list this week. I'm not sure who our third would be anymore. It used to be lumber. I'm not sure who the third would be now. So we'll have to maybe come up with a third mover and shaker, a frequent offender, listeners. And then number 1, maybe it is palladium. It's there all the time. Palladium, number 1, off 8.24%. It was number 5 in the same, or in the other direction last week, up 3.62%. Now we're going to shift gears, go to the vol side. Mr. Rhoads, you like to watch a lot of vol. How much attention?
I do.
How much attention do you pay to the C-vol indices, sir?
Not as much as I'd like to. I've emailed my Bloomberg rep a couple of times and asked them to add them to the because I'd like to be able to get the history and everything else to work with quite easily. But I love how I'm looking at the movers and shakers report where you have the light side and the dark side. And I love the way that they, break out all the different aspects with respect to implied volatility in a whole lot of markets. And we've spoken ad nauseum about how there is information in the skew, in the term structure in the skew that you don't really get anywhere else, and it really is a good indication as to whether whether the majority of market participants are bullish or bearish or concerned about or not concerned about a certain market. So I love putting a uniform number out there to help us with the things that I've been talking about on this show for a couple of years at least. I think it's great. I wish I had better access to them. That's all.
Yeah, it's pretty much available to everybody on that same page at cmegroup.com/CVOL.
Yeah.
We have a little bit more access, obviously, because we have all the Bantic stuff as well. So they have some cool tools where we can analyze and play with it a little bit more. But the raw data is pretty much there for everybody, listeners. If you want to check these out, cmegroup.com/CVOL is the place to go. Just type CME and CVOL into your browser. You'll get there. And then I know CME is going to be talking a lot more about these this year. So you're probably going to see tweaks, upgrades, maybe new additions to these going forward. So I think a lot on tap for CVOL this year. All right, I'm going to choose this time because it's fun, Mr. Rhoads. I'm going to go dark side just for fun. So to the dark side, again, these are the vol movers and shakers for this week, listeners. Again, all done by the CVOL methodology. It's kind of like a VIX methodology, very similar, as Mr. Rhoads said, incorporates the skew in there as well. All right, to the dark side we go, listeners. Number 5 to the dark side, 3 months SOFR. Easy for me to say. 3 months SOFR up there. That's off about almost 1.2 points on the week. Again, these are vol movers and shakers. So they crunch all the numbers in the CVOL calculation. It spits out a number like you see with VIX. And these are the net movers we're seeing for the week to the dark side. Number 4, they have also these aggregate CVOL indices, listeners, which kind of lump together an entire complex. In this case, the treasuries, which come in at number 4. The aggregate Treasury CVOL index is off 1.64%, or 1.64 points, I should say. Percent of percent. I know people get weird about that. Again, that shows you vol kind of coming in this week on the Treasury complex after we had a little bit of a pop last week. Number 3, keeping it in the Treasuries, this time to the 10-year, the one more of you and most of you out there really focus on, I think. The 10-year CVOL off about 1 3/4 points. Back to 3 months SOFR again, 2.8 points for number 2. And then the number 1 vol dark side mover this week is actually the 30-year, off a little over 4, about 4.1 vol points. So that's a decent chunk for the rates complex, which is not known to be a bastion of volatility. All right, to the light side we go, listeners. And number 5 to the light side, we go back to the ags. It is corn, up about 0.5 point. So not a banger, but again, that kind of shows you a light vol upside week. Number 4, we have soybean oil. So we're keeping it in ags, up about 2/3 point. Number 3, also, again, kind of getting back to some of the rates in the 3 month SOFR. Some of these, we had the 2-year, I should say the 2-year SOFR. That was on the dark side, number 5. Now we have the 1-year, so the nearer dated stuff. Number 3 to the upside this week. So kind of a bifurcated complex, which is going to happen when you have so many expirations going off in the same product. We have that up about 1 point this week. Number 2, back to the ags. It is soybean meal, up 1.5 points. And the number 1 light side vol mover this week is the 2-year. So again, kind of a mixed bag on the vol front from a rates complex perspective. Nearer portions of the curve popping a bit this week, up 3.16 points for the 2-year CVOL versus the 30-year farther out in the curve being the number 1 dark side mover. So kind of an interesting week from an underlying movers and shakers and from a vol movers and shakers perspective. All right, Mr. Rhoads, we've crunched a lot of numbers. We've talked about a lot of data. Where should we begin the show proper this week, sir?
Oh, let's definitely go to energy for the light side stuff, because energy affects everything else.
It does. We are all net short crude at the end of the day, right? All right. To the land of energy we go, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful world of energy. You folks know where to go to find these for yourselves. CMEgroup.com/TWIFO, TWIFO, /TWIO should also work. They'll both get you to this drop down. From there, you go down the asset class, 3 slots to energy, of course. Then where we start is anyone's guess. You know, the big offender once again this week is our number 2 dark side mover, which is nat gas, off 6.15%. So I think we're going to have to start there. Nat gas coming in to start the show below the 2 handle now, listeners. We were flirting with the 2 handle on the show with Dan Gramza last week. Now we have broken through it. That front future at right around 193 as we're kicking off the show, off about 15 cents or about 7.25% just since Monday. Of course, you go back to the end of our show last week, it's off a little over 6%. So again, dark side continuing to dominate the tape, Mr. Rhoads, in the land of nat gas. And you know what else is fascinating, Russell? Is that you and I have talked nat gas for a while on this show, but the volume that is going up out there now is just taken yet another turn to the upside. We used to talk about 450, maybe 500,000. If there was a really crazy week, you're talking 500,000 contracts. Over 1 million already today, Mr. Rhoads. 1.01 million contracts going up in nat gas. And of that, a full 33% going up in the March contract that has about 18 days to go. And again, we have a bit of a dearth of near-dated paper right now. There's no one-day or even weekly contract. The closest we have is a 15-day contract. Then the March contract has 18 days to go. So you're talking a couple of weeks on the outset, maybe a little bit longer than a lot of you like to play these days in the world of 0 day, but that's what we got in nat gas. That's where fully a third of the paper is going up. Before I break all that down, Mr. Rhoads, does that surprise you, the amount of volume we're seeing out here in nat gas? I mean, everyone jokes about trading options on stocks, right, when they're below $5. No one wants to touch them. Here's nat gas below $2, and it's printing contracts like it's going out of style, sir.
I think there are a lot of people that get hurt with nat gas under 2. So you got to assume breaking that psychologically very important level. And I mean, we've breached it a couple of times within the last 12 months, but we haven't really broken it. We definitely are breaking down right now. And, you know, you can see, I know you mentioned that a big portion of the volume is in the options that expire in 18 days, and the most active there is a call. But then when you go past that, it's a lot of and I like using fractions because I'm old. It's a lot of 1 3/4 puts that are getting an awful lot of love, which makes me think that there's at least concern about further downside from here.
We had your good buddy, Miss Carly Garner, on the show a few weeks ago. And she said we might be returning to kind of an older regime of nat gas where it's a little bit quieter, a little bit more boring, bouncing around in the kind of 1.5 to 2, maybe if it gets crazy up to 3 range, as opposed to the Ukraine periods where we were just blowing the doors off everything. A, do you agree with that? And B, I threatened to have her come on the show and slum it with you someday. You can do a twofer, and she politely declined. She said that was beneath her.
Did she? That hurts. That hurt. That's because I did such a poor. That's because I did such a poor job. The one time you let Ed McMahon be Johnny Carson and host, and she was the guest.
I'm putting words in her mouth. She's going to get mad at me. She said anytime, sir. She wants to do with you anytime.
I'm just joking. I had a funny feeling. At some point, she and I will meet in person.
There we go.
Amazing how you work with people these days over in a bunch of different capacities, and you never actually meet in 3D until some point, until you're old and almost done with your career, I guess.
So you think we're heading back to that kind of maybe an older, I won't say a boring, but a little bit quieter period for nat gas, sir?
Yeah.
No, well, there you go. Show's over. Yeah.
Yeah. So, I nat gas, gosh almighty, the whole energy complex is confusing the heck out of me because, there are questions as to what's happening within the economy. And typically you see energy prices come under pressure when everybody's worried about the economy. You see energy prices go up when everybody's worried about World War III. And energy prices I just don't think they know what to do. But I think the macro situation is so uncertain. I think you can look at the financial markets, and I can pick out 5 markets that tell you everything's going to be great and 5 markets that tell you everything's going to be horrible. And nat gas dumping like it is right now, that's not very much of a positive. And then the other 2 energies that were on the light side, those are very transportation oriented as well. Especially RBOB, and a lot of people don't realize this, but heating oil has the best correlation with jet fuel. So often, if there are concerns about jet fuel, you'll see them hedge with heating oil.
Makes a certain amount of sense. You know, you have the refined products out there. I could see there being a correlation between the two. Yeah.
So just when I saw a light side, those two higher, I'm like, all right, everybody thinks everybody's going to be traveling and it's going to cost a lot more for my Amazon boxes to get to me. And then you see nat gas down a bunch, under pressure like it is. And you're like, well, maybe people aren't going to be consuming as much energy, or, what are they thinking with respect to that one? So it's really hard to get a macro read. And typically when I'm on this program, you have a pretty good macro read when we start going through the markets. Isn't it great to have a guest on that says, I really can't tell you what it's telling me right now?
That is the best part of it, sir. At least you said more than one word this time. That was good. You're learning. You're learning this whole radio gig.
I am.
Let's see what's cooking in the nat gas complex this week, listener. Mr. Rhoads already mentioned we're seeing a lot of action on the 1 3/4 puts. We'll get there in a second. First, right now, I said March contract leading the dance with fully a third of the volume out there right now. The vol out there in the March complex with 18 days to go, a little bit shy of a 60, about 58 3/4, off about 5 2/3 points on the week. So still frothy, still well above most of the complexes we're going to talk about, but coming in a little bit. It was in the high 60s, even higher not too long ago. So still, again, respectable out there. Skew-wise, interesting to see. Puts have swung. Puts last week were 4.5% bid. And then this week coming in, looks like it's the same, but actually when you dig in a little bit, you see it's actually 4.5% offered, 4.5% discount. So a 9-point swing to the dark side on the puts. And we saw a pretty decent move on the calls as well. The calls last week, almost a full percent cheap, so kind of flat, but a little bit discounted. This week, 7.4% bid, so almost a 9% swing to the calls as well. So a 9% swing to the dark side exactly for the puts, and then almost a 9% swing to the upside for the calls. So maybe that's starting to show us that maybe we're starting to bottom out. Maybe now that we broke through the 2 handle, maybe folks think this far and no farther. I don't know. Or they could be just taking off a bunch of their puts they had on the 2 strike, and all that selling activity is what's crushing the skew. Either way, we are seeing the puts offered and the calls bid. So very intriguing out here. And Mr. Rhoads already kind of let the cat out of the bag with what the big dog is out here. It is the 1 3/4 puts, but it is weirdly enough not in the March contract that has 18 days to go. We're going out to April, which has about 46 days to go. Those are the 1 3/4 puts that are leading the dance with 53,000 contracts already going up. That's pretty active. That's more than some of the other complexes. We could add up a lot of the top 5 movers and shakers in both directions and not get to 50K. So 53,000 in one put. That's a decent clip. The 1 3/4 puts, again, 20,000 trading today already. That's against OI of 26,000. So they could be taking some off today. But if past is prologue, throughout the rest of the week, they were mostly opening. So probably opening again today. Nearly 15,000 going up yesterday, mostly opening. 7,500 on Tuesday, again opening. Monday was a decent day as well, almost 11,000. They did close a little bit there. So again, intriguing paper. You think they're opening or closing with about 47 days to go on these puts list. And let's see what the skew tells us out there in April. And the puts there, listeners, actually getting more bid. They went from 7.7% bid to about 9.3% bid. So interesting. A lot of that probably reflected in this opening 1 3/4 put paper. Seems like folks are opening to buy on that strike, which again, given our recent price action, not exactly surprising. If I had to come in right now, you told me gun to your head, you buying or selling the 1 3/4 puts, I might buy them. Just given what's been going on out here. So intriguing stuff out there. That's the big dog. Then after that, we go back to the month that is leading the dance. We're going back to March, this time to the upside again. Now, I was talking with Dan on the show last week about funky upside in nat gas. It seems like this upside persists. In this case, it is the 2.5 calls yet again. These only have 18 days to go, listeners. These are now nearly 60-cent out of the money calls, trading nearly 40,000 times this week, 39,000 and change. The big day yesterday, 12,000 opening. People are opening on the 2.5s yesterday. About 11,000 almost today against OI of 31,000. So anyone's guess. Let's hope they're taking some off. Tuesday, about 10,000, slightly closing there. Opening again on Monday, 6,700. Now, they could be opening. They could be overriding. We looked up last week what they were trading for. It wasn't a lot. So if you're overriding these, you're not getting a ton for these. But c'est la vie. Maybe as a covered call, you don't mind if we do see a rally to 2.5 in the next couple of weeks. You don't mind letting some go at that level. Either way, that's the big dog, followed right behind it by the 1 3/4 puts in March. Again, 18 days to go, going up 38, almost 39,000 times. The big day for those was Tuesday, about 15,000 on Tuesday, mostly opening, 7,000 on Wednesday, 4,000 on Monday, all opening, and about 13,000 and change today, I guess against OI of about 20,000. So again, today's paper, anyone's guess, but again, given some of the skew action we're seeing out here, it could be maybe some folks overriding these in the near term, and then maybe buying the longer term 1 3/4 puts. Mr. Rhoads, what are your thoughts on this paper we're seeing out here in the land of nat gas this week, sir?
Yeah, those 2.5 calls, I'm just looking at the price action, and it's been about a month since we were above 250. And I have a heck of a time looking at this chart, and I know nat gas can do an awful lot in a very short period of time, but I have a heck of a time believing that in the next 18 days by February 26th, that nat gas is going to be back up above 2.5. And not just because Carly Garner is bearish on it as well. So I don't know how I'd feel about stepping up that far out of the money, and I'd want to give it some more time, is what I'm trying to fumble around and say.
2 halves, maybe
I'd be
April.
looking farther out at the May or the June options, and hope that we can work our way back higher.
Definitely longer than 18 days.
Yeah. Yeah.
But this has been going on for a while. We saw the threes. We saw 3 halves trading not too long ago to the upside. So, yeah, these are weird. Maybe people are still thinking we're in this kind of, obviously the Ukraine war is still going on, so it's not done. But maybe people are still thinking we're in that paradigm of vol and explosive upside. It's funny, not that long ago on this show, nat gas was kind of a sleeper product. I would say, who cares about that? It does trades $1.50, maybe $2. Doesn't do a ton of paper, does some. And if it blows up to 3, they think they're losing their mind. That's what nat gas was in a nutshell for a long time, right? The last couple of years have changed that paradigm a little bit. It's our mover and shaker pretty much every week now. It's doing a million contracts a week, if not more. So it's a much different product than it used to be. But yeah, fascinating stuff. I mean, 2 half calls, still trading. 18 days to go. But that's not quite what we were just talking about on our option block show, where people are buying the 150 calls an arm with a day to go, over 30 handles out of the money. Not quite that crazy, but we're getting into some rarefied territory here in nat gas as well. All right, Mr. Rhoads, you want to hang out in energy some more, or you want to go somewhere else? Well, you're the guest. You choose.
What time is it? Well, you know what? We're halfway through. Let's try to find another market, but I'm going to let you choose.
Oh, I'll choose. Okay, that's kind of fun. I do wish Bitcoin was lighting it up. I would love to sink my teeth into more Bitcoin. We could try to find some stuff out there. Usually it's still been kind of light out there, or we could go off to the land of the metals. Copper, decently active today. Maybe we can throw in some other metals, or perhaps we can go out to the vol movers and shakers. Corn, kind of moving out there from a vol perspective, or any of the rates complexes, sir. I know you love yourself some rates.
Let's do copper, because I'm kind of hung up on the macro stuff, and copper is a great macro indicator.
Copper is the most macro indicator. All right. All right, to the world of metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the metals we go. And it's funny, even in the intro for this segment, we talk about silver, gold, and other shiny things, but we're not getting shiny right now, listeners. We're going to get base. We're all going to be very base together. A little bit of copper action. Go into that drop down, listeners. You're going to go almost all the way to the bottom. One above the vol indexes, which are, of course, the CVol. You will see metals. And then from there, normally we go precious. We're going to skip down there, though. We're going to get away from the micros as well. That's something we talk about a lot, the micro metals. And then to the land of the base. What's included in the base, you might be wondering? Well, of course, copper, our old friend, aluminium, as the Brits might say, and cobalt. Cobalt, who knew? But copper, we go right now. Copper hanging out 370, listeners, off about 11.5 cents, or about 3% since Monday. If you go back to the end of our show last week, it's off about 4%. As Russell was alluding to, when you're talking copper, you're really talking macro demand. You're talking a surrogate for Chinese demand as well. You know, whither goes China, so goes copper. Those two are inextricably linked out there. Chinese demand obviously seen as kind of weak right now, so not a surprise that maybe that's weighing on all things base, all things copper. But Mr. Rhoads, diehard macro strategist that you are, sir, what's catching your eye in the base metal of copper, sir?
In the base metal of copper, there's a lot. It looks like you got to go past a bunch of daily expirations that aren't doing a whole lot of volume and get down to looking at the February 26 contract again. It looks like the calls are a bit bid. The calls have been the most active. They've had pretty good volume. About 50, or no, I'm sorry. About 11,000 contracts in the March contract that expires at the end of February. I guess that's looking a little bit bullish when we're under pressure here. I like to look at the skew when you're near a support or a resistance level. We weren't really near support or resistance when we were talking about nat gas, but copper right here in this low 370 range, that kind of is a support level. So it does look like maybe in the more actively traded options, not the daily ones, but the more actively traded ones, that the calls are getting a little bit of love, and there's an expectation that market might rebound over the course of the next few months. But here's a big question for the folks at CME Group. Why do we have the daily copper options and we don't have daily nat gas options?
Great question, sir. One I've been asking for a while, just given the quote-unquote explosive nature of the nat gas complex, 1 million contracts.
You would think, yeah.
You think they might want to lean that way?
When you see as many contracts as trading without, is probably the most. Yeah, I could just say, if somebody said you got to guess the most active option market without dailies, I'm going to say it's nat gas right now.
Yeah, I mean, you're right. You're looking at the liquidity that they're carving up with all these daily listings in copper. And by the way, I was just talking about that one put, the 1 3/4 put, right? Doing 53,000 contracts in nat gas. Again, that's more than the entirety of the copper complex, about 30,000 contracts going up across all of this. Yeah. And you're right. They have a 1 day to go contract, 3 days to go, 5 days, 6 days, 8 days. Pick your poison, listeners. You can get all the expirations you want in copper out here right now. Meanwhile, nat gas doing 1 million contracts, you got to wait 18 days. So I know for some of you that might be a little bit disconcerting. And the folks at CME, they get it. You know, this end of the day, if it makes dollars, it makes sense. They want your volume. But it is strange, you're right, the way some of these expiration cycles break out in different products, Mr. Rhoads. Let's get out to some of this flow out here right now. And it is kind of refreshing, you know, for all this talk of near-dated liquidity in products like copper. We're going out here a little bit, listeners. Of this 30,000 contracts, we have about a little over a quarter, 26.5% going up in the April contract, has about 45 days to go. And then about 37% going up in the March contract with about 18 days to go. But we're actually going to go out to April because that's where the big dog of the week is. Well, before I get there, let's break down what's going on in the May contract. Again, 373 is where that future's trading. Vol, you might be saying, what is the vol in April copper right now? And I would say to you, 16.5, off about half a point. So coming in a little bit. Again, if you know the metals, not typically bastions of volatility out. They can pop on occasion, but for the most part, gold, silver, and even some of the base metals, not exactly explosive vol products. 16.5, it's respectable. It's more than you're getting in the equities right now. So if you're looking for a little bit of vol, maybe this is a better choice for you. In terms of skew, a little bit of evolution. Last week, the puts about almost 1 point cheap. This week, nearly 2 points. So coming in a little bit. The calls last week, about 4% bid. This week, about 4.7% bid. So catching a little bit of a bid to the upside out there. So a little bit of kind of the metal skew we've come to expect, where the puts are discounted, the calls are bid, but nothing that extreme, nothing like we see in gold and some of the other precious stuff where, the upside is bid to high heaven and the puts, nobody wants them. It's kind of just a mild metal skew, I would call this out here. And what's leading the dance out here in all things copper, listeners? It is the 430 calls, 4.3 calls going out in April this year, doing a little over 2,000 contracts. Actually, a total now of 3,000. Looks like they've added some more since the show started. We have 3,067 of these April 430s going up this week. And unlike a lot of the other products you talk about where they kind of trade steadily, trade actively all week long, nope. all of these 430s pretty much went up in one big chunk on Monday. 3,030 of them, all opening. I don't see any other strikes or anything else. It looks like a roll or anything like that. So somebody just opened for size on the 430s in copper on Monday. That's kind of interesting. I don't know. Mr. Rhoads, you always have your Bloomberg fired up. I can go dig into the block prints. Can you see what they put these on for?
They paid $250 for them, and they actually sold the 450s for $1.40.
Oh, okay. That's a little interesting. So
yeah, I was already doing that. So when you ask,
I don't see the 450s on here, unless that's you talking about farther out.
No, they're both. You're talking about K is April. Check K. Those are May. Actually, I'm looking at. You were saying the May 430s. Yeah, I see 2,000 lots in the May 430s late in the afternoon on Monday, and they're matched up with some 450s as well.
Oh, weird.
It's just a couple of thousand lots, and again, I think they're paying $250 and selling at $140.
Oh, no, I see.
They put them up at 4:16 in the morning. Oh. So I'm assuming they were crossed.
Yeah, some funky block. I see what you're talking about. You're talking about the. I'm talking about the Aprils, but there are some Mays as well going up to the 2,000 lot of the 430s going up in May. Those have about nearly 80 days to go. And then the Aprils going up with about half the time, about 43 days to go. Those went up 3,000 times by themselves, apropos of nothing.
Oh, there they are.
Yeah, I don't see anything else with those. So
70 cents on those.
70 cents. Interesting.
That's what I scrolled up, and the second I scrolled up, those a couple of 1,500 lots popped in front of me at 70 cents.
430 calls for 70 cents going out in about 46 days. Huh. I mean, again, I don't sling a lot of copper. That seems a wee bit rich to me. What about you, sir?
$5 copper.
There you go. That's what that's saying, right? Explosive. I guess that means all this stuff we're hearing about weakness in China, that's all overdone. China's going to come roaring back in the next month and a half, sir. And these 430s are going to be laughing in all of our faces. What do you think?
I have a hard time with that one. But if you think so, good.
I guess gun to your head. You got to buy these or the AMATs 150s expiring tomorrow. Which way you going?
I think I'll just go find a homeless person and give them my cash.
Oh, that might work too.
At least it'll get done. It'll do some good there.
There's no room for altruism on the show, sir. We must throw our money away.
Yes.
Trading nonsense. Yes. That's what people
We're going to throw our money away. We may as well have it do a little good.
Yeah. I mean, again, I don't trade copper every day. I have a hard time seeing that coming to pass and that. But hey, I've been surprised before. So these economic headwinds could turn. This has all been a shell game coming out of China. The economy's robust. Bam, here we go. And then here comes $5 copper by April expiration. Now, somebody's playing that game, listeners. Again, there's no roll, nothing else with it. At least the 430s in May have something else against it. This is just straight 430 love. So opening. So yeah, upside in copper, listeners. The mysteries continue. What other mysteries shall we explore on the show today, Mr. Rhoads?
Gosh, I kind of what you don't like it when I do rates, but
I'll do rates with you. I'll go on a rates cruise. We
had a big change in outlook last week for rates.
All right, to the rates we go, sir.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, welcome to the wonderful world of rates. Going to that drop down, pop one out of metals, up one into interest rates, and we're going to go into U.S. rates. Where we go from there is anyone's guess. We usually hang out in the 10-year, but maybe Mr. Rhoads has other plans. And Mr. Rhoads, we talk about rates on the show. We taled about it certainly during Fed Week. You missed the Fed Week show. Can't not talk about rates during Fed Week, right? And you're right. The Fed Watch has been fascinating to watch, pun intended, of late. People got maybe a little bit ahead of their skis on, the rate cuts are coming, right? We talked about on the show how back in December they were pricing in almost a certainty of, a rate cut by March. That obviously has gone the way of the dodo now. Hasn't derailed the market at all. But fascinating stuff. We haven't talked to you since Mr. Powell and company did their dance. So what were your thoughts on that and what we've seen in the rate complex as a result, sir?
I'm absolutely shocked at the way the stock market reacted to we're not going to get a rate cut in March, which is what the market indicates now. And we're really close to 50-50 on a potential rate cut in May. And, I think to self, if there's this uncertainty over, when are they going to get started, is why we're seeing that disconnect between the 2-year and the 10-year, in the light side, dark side on the CVOL indexes. So what I wanted to do is I wanted to go see what the option activity looked like in the 10-year and what did the option activity look like in the 2-year, and is it still, are they bearish on one and bullish on the other, or what's going on here? Because I do know Bill Gross came out, and I didn't see the exact trade he said he was doing, but between lawsuits with the neighbors and blasting music and being a general jackass, he said that he was trading the curve where he's expecting normalcy to return to the curve. And I wonder if his opinion earlier this week is bleeding through to the futures that have different tenors with respect to the yield curve. So that's why I wanted to pull you over to rates right there.
To the land of rates you go. And you're right. We just talked about it in the CVOL, right? A lot of the action that's interesting and a bit of a bifurcation between the narrow dated portions of the curve and the longer dated portions of the curve, which kind of makes it fascinating. And also, I was kind of surprised at the vol pop we saw coming out of the Fed, because usually when the event is done, the juice comes out. They squeeze it out. But we actually saw vol sneaking in across most of the rates complex immediately post Fed decision, which we don't normally see. Seems like some of that vol starting to come out now, which is kind of fascinating. Off to the 10-year we go, listeners. And again, we're talking volume. You can't really hold a candle to the rates complex. Over 3.06 million contracts on the tape in the 10-year. So 3x what is an explosive, pun intended, week already in nat gas. Many orders of magnitude more than copper, obviously. So yeah, the rates complex, they live in a rarefied air all their own. And right now, the 10-year hanging out 110 and about a quarter. That puts it off nearly 30 cents or almost a full percent on the week. Of course, that's just since Monday. We don't have our 10-year in the movers and shakers, so I can't see how much it is off on the week going back to the end of our show last week, listeners. But of that 3 million and change worth of contracts, it is kind of refreshing to see nearly half of it, 46.4%, going up in the March contract that has about 15 days to go. So you're not talking 0 day, even though there is some paper going away in a day. There's some paper going away in 4 days. But the lion's share of the action is going out in 15 days, which compared to most of the paper we talk about now is a relative eternity. You're talking about vol coming in 6.25. That is what the vol is right now in the March contract, off about 1/4 of a point. Doesn't sound like a lot when you're taking 1/4 of a point off the top and you're already only at 6.5. That's a pretty big percentage move. I know, percent of percent drives people crazy. I won't go there. But intriguing stuff. In terms of skew, a little bit of evolution there. The puts last week about flat. This week about 3% cheap. Doesn't sound like a lot, but again, you're talking about a low baseline to begin with. And then the calls last week, about 1% bid. And they are about exactly the same this week, about 1% bid as well. So not a huge evolution on the skew front, but some moving and shaking on the vol front. And in terms of action, what is leading the dance out here this week in the 10-year? Again, a product that just blows the doors off from a volume perspective. It is the 110 puts. Remember I said we're at about 110.25 right now in the 10-year. So it makes sense. 110 puts a very relevant strike right now. 166,000 total this week. So you're talking 3x that very active 1 3/4 put that went up in nat gas. And of course, you're talking, quite a bit more than the entire complex of copper, which was somewhere around 30,000 contracts just in these 110 puts. And again, the big day for these Monday and Tuesday. So they came into the week hot, doing about 52 to 54,000 contracts each, mostly closing there. And then towards the latter half of the week, they started opening again. 25,000 on Wednesday, mostly opening. Today's paper, anyone's guess, about 35,000 on the tape against an OI of 121,000. So there certainly is enough paper to burn if they did want to close today. But 110 puts leading the dance for some size. Behind it, we have the 110.25 puts. So exact at the money puts right now, going up about 117,000 times. Unlike the 110 puts, though, the lion's share of that going up today, 92,000 My goodness, 92,000, 110 and a quarter puts going up just today. That's against OI of only 72,000. So clearly opening paper on the 110 and a quarter puts. Again, it is the exact at the money strike, so makes some sense, but still that is quite the amount of paper. The rest of the week, who cares? Nothing. Again, that speaks to what I was talking about with the rates last week with Dan Gramza, is this very staccato, almost binary nature of these products. They're on or they're off. And when they're on, they're doing size 93,000 contracts in a day. The rest of the week, kind of off, 3,900 yesterday, and not much the rest of the week. So they come in huge torrents, and then they kind of go away, which is kind of fascinating. Mr. Rhoads, have you noticed that strange, almost staccato nature of rates paper sometimes, where a contract, a month, a strike can do just an explosion of paper one day, and then the rest of the week, almost zero contracts, which is strange. I'm hard pressed to think of another product that really does that. What are your thoughts on these 110 and 110 quarter puts, sir?
Well, there are a few markets that they have very large option volume on average, but the options tend to trade by appointment for the big blocks, and that's definitely what we have in the 10-year space. What really stands out to me here, we've got a lot of decent-sized put buyers. Looks like there's decent-sized put buyers for the February 14th and the February 16th, which expire in the next expire next week, and the February 16th. Those expire after we get CPI and PPI. CPI and PPI are divided up a little bit time-wise. The CPI comes out on the 13th, and PPI, usually they're back-to-back. And CPI comes out on the 13th, and PPI is coming out next week on, the 16th. Also, there might be a lot of confusion and volatility around the next PPI and CPI reports, because they're doing their every 5 years, they do a, they rebalance and try to make the CPI and the PPI more realistic. And this Friday, we find out what the new CPI looks like. And next Friday, we find out what the new PPI looks like. So I wonder if that's adding a little fuel to the fire with respect to worrying about maybe inflation coming in hot, pushing rates a tad higher and helping out all those people that own puts on the 10-year.
Yeah, that's definitely going to gum up the works a little bit. So should be fascinating to see. I wonder what crazy one-day prints we'll see in the 10-year next week. I guess we have to tune in to the show to find out, listeners. But speaking of listeners, now it's your time to take the reins, listeners. A little bit of your futures options feedback.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to your feedback. No shortage of ways for you folks to get at us at Options on most of your major social media platforms. Will get at us. Of course, questions at theoptionsinsider.com also work, so you can join us in the live chat, just like a lot of our friends do here. I see Nichols and the Queen, Miss Options Queen, both of them talking about CVOL, saying they're liking CVOL. Nichols says, I find the CVOL charts cool. Well, there you go. They're cool. I like that. Cool CVOL. CME can use that in their branding here. Option God saying we need a Russell and Carly double episode again. Mr. Rhoads, sounds like you're down for that. The chat wants it. What do you say?
I'm happy to do that.
All right, we'll see.
Happy to do that.
We'll see if we can make that happen exclusively for our listeners. We'll force Carly to come to the table. She doesn't want to slum it, but I guess she'll have to. And
maybe that should be one of those pro.
Oh, there we
episodes where she and I can debate a few markets. That might be kind of fun.
Double pro Q&A? We've never done that.
That might be a good format for it.
Oh, now you're intriguing me, sir. Oh, so it is the pro folks. It is the pro folks asking for it after all. Maybe we should give them what they want. I don't know. You folks down for a double pro Q&A with Russell and Carly together again for the first time ever? All right, interesting stuff. We've also got Age Del Aquarius says he's been trading. I just lost it, of course. There we go. Get my chat back up here. Bad timing. Here we go. I've been trading energies for over 10 years and never knew that correlation between heating oil and jet fuel. Very good tidbit to learn. So there you go, Mr. Rhoads. You're educating all of our pro folks all the time. That's not a bad idea either with the double pro Q&A. So what do you say? You're teaching people new correlations, sir. Well done.
Working on it. Most definitely working on it.
So while you're corrupting young minds at the Kelley School of Business, you are educating minds here in our pro, sir. So you're making up for your evil in other ways. All right, let's keep rolling. Our question of the week.
You just chopped in and out on me, so I apologize for my awkwardness.
That's all right.
I lost you there for a second.
I'm used to your awkwardness on a regular basis, listeners. Let's go out to our question of the week. Our question of the week right now, not that germane to this program. It's more about earnings season, even though I know a lot of you are slinging a lot of earnings vol right now, because how can you not be? It is the dominant conversation on the equity side, that's for sure. So right now, 46.7% of you saying earnings season is somewhat important to your options trading. 26.7% say very important. 20% saying a little, I guess, and 6.7% say not at all. At Options is the place to go to vote on that one. But last week we had a question of the week that I think is more up your alley, Mr. Rhoads. We asked our listeners last week, VIX has been below 15 since last November. How will that impact your options trading going forward if this vol regime persists for a while? So we hang out below 15 for the foreseeable future, listeners. I gave you 4 choices: less credit or income trades, more debit or long premium trades, so AKA are you buying or selling vol, and then other, or you have no impact, you're immune to VIX. And Mr. Rhoads, our audience says they are immune to VIX, 35% saying they don't give an F where VIX is, which to me was kind of fascinating. We asked for more details, and a lot of the ones who chose that wrote in to say, they're trading more the contango in the vol surface, so they don't care as much about the relative vol levels because all they care about is the slope of the futures. I could see an argument for that to a degree. Obviously, you're not immune to VIX in that scenario, but maybe less concerned about the relative level of VIX. But there you go. Our audience saying they're immune to VIX, Mr. Rhoads. What say you as the once and future Dr. VIX?
I'm not totally immune to VIX, but I've just been, the only time that I really alter what I'm thinking about doing it based on what VIX is doing is when it's up, in above 25 or so. And I just feel like there's too much uncertainty in the markets at that point. So I kind of like VIX anywhere between 10 and 20 and consistently there because the systematic approaches that I utilized on a pretty regular basis work well in that environment, work better in that environment. In fact, I use some of my some of the sizing that I do and the strategies that I do are completely, dictated by where VIX is. But as far as it being an overarching thing that's in the back of my mind with the things I'm doing these days, not really at all. Because I consider the levels we're at now to be really more normal than anything else.
Yes, they certainly could be quantified as such. Besides, you're just slinging SVIX all day anyway. That's all you're doing. Just buying SVIX.
I do more than SVIX.
Rinse and repeat over and over again. We also asked you during the show last week, listeners, during TWIFO, which rates options should we analyze on the show? I kind of thought you would line up along the 10-year, and you did. 50% of you exactly saying you wanted 10-year on the show. A third of you coming in for the 30-year, which kind of surprised me. A little love for the longer-term stuff. 16.7% for SOFR, 3-month SOFR. I know that's a product a lot of you have a hard time coming to grips with. It's a tsunami of paper, and a lot of it is massive institutions. Kind of hard for a lot of you to really parse that one. I get it. So you don't really talk about it on the show that much. And then none of you, no votes for other, not even one vote for the 2-year or anything. So yeah, all of you want the 10-year. So that's kind of why we lean at the 10-year when we go to the rates complex, listeners. All right, that music is going to do it. We got Nichols in our live chat saying, that was a good TWIFO episode. Right back at you. Great questions, great comments. That was a fun show, Mr. Rhoads. Did you have a good time on TWIFO this week, sir?
I had a wonderful time on TWIFO this week.
There you go. And our listeners want you back, clearly. They want you back. Maybe doing a duet. You think you can do a little Islands in the Stream with Carly, too? A little bit of a...
I think that'd be really cool. We can. We're both beagle lovers, and we both love the markets.
We're talking up all this mess. She's going to come on and be like, what the hell did you guys talk me into? I have to sing a duet now with Russell? So, yeah, she'll never be on again. But in the meantime, we can have fun. Yeah. All right, and Mr. Rhoads, in between your appearances on this fine program, if folks want to keep up with what you got cooking, where should they go? What should they do?
I have a Substack that I, at minimum, update every weekend about what I'm thinking about the markets and what I'm looking at in the markets. It's my full name, .substack.com. The easiest way to know what I'm up to, et cetera, is just follow me on Twitter. I sneeze 2 times and hurt my back, and I tweet about it. So, that anything I do will be on Twitter. Although I forgot to tweet that I was on with you today. Sorry.
He tweets about hurting his back, but not
tweet everything I do except for what I'm doing right now.
Tweeting the important, the cool stuff.
So there you go.
But aches and pains, you'll get that all day if you follow Russell Rhoads on Twitter. 2 S's, 2 L's, RHOADS, all one word. I know it's a mouthful. You just got to type it in once and hit follow, then you're good to go over there on the old Twitter/X. And then, of course, you know where to go to follow along with this show. These reports are running all week long, listeners. You can go to cmegroup.com/TWIFO whenever the mood strikes you and get updated Lean Hogs reports. If you want to get them at 2 a.m. on a Sunday morning, no one will judge you. Well, maybe your significant other will judge you, but we won't judge you because we won't know. cmegroup.com/TWIFO, the place to go to get all that data over there. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk a whole mess of vol. Who's going to be joining us to do just that? Don't know. You got to find out when you tune into the show tomorrow. Then after that, exclusively for the pro folks, we come back again for a little bit of options oddities. By the way, congratulations to our pro member, Wolfpack. Mr. Rhoads chose you, so for all of you out there who didn't win, send your angry hate mail to Mr. Rhoads. It was not me. But congratulations to Wolfpack and all of our pro members out there. Remember, you want to get your name in the hat for the February Pro Trading Crate. Only one place to go, theoptionsinsider.com/pro. A lot of fun stuff waiting for you over there. Then, of course, back again on Monday with the option block all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.